Welcome, everybody, to another live stream here, Tom's Trading Room. I am Tom. Glad to have you guys checking in with me on the 21st of June, 2021. It's 2121. Glad to have you guys all here. Where's everybody coming in from? Give me a shout. Will, good to see you. First one on the board, William Rogers. Hello to you. Hello to all of you. Glad to have you here. I'm going to, I got a lot to cover with you. I want to talk about the overall markets. I want to look at June and see what's going on with the month of June. You know, last week we had a little burp, a little hiccup, if you will, in the markets because, Fed decision came out. And because they're talking about interest rates, I said that correct. They're talking about rising interest rates. That spooked the markets for several days, and even last night the markets looked like they were it's gonna be a rough ride. And then this morning everything changed, back moving higher again, and we're gonna get into that. We got a lot happening in here. Wow, London, UK. Albert, good to see you. Barbara, Torino, Michael, John, Tim. Terry, man, I got a ton of folks in here. Glad to see you guys here. Very exciting to have you here for today. Let me put the screen up here so we can get going. For those of you new with us, I want to thank you for being part of our live stream. We do things a little differently here, as the folks that come in and join me once a week do. I don't do this every day. All right, I'm not going to live stream from 9 in the morning till 4 in the afternoon. Honestly, I think that's a waste of both of our times if I did that. I want to get in here and within an hour or so give you what I am looking at for the week, what the markets are doing for the week, and what's going on. Last week we discussed right here on the live stream. We discussed several things. We were doing something called the morning report, and I've been talking about that. I'm going to bring it up today again too. And the reason I'm bringing it up today is I've got another video coming out on the morning report. We're going to look at open interest and volume, but I really want to scan through and just look at several different things. Everything we do here at Tom's Trading Room, all right, revolves around these three principles you see on the screen. And that is, number one, we look for rules-based opportunities, all right? Rules-based opportunities, it's kind of important here because we're not going out and, we're not running out there and talking about, things like hope and fear and greed and, the alpha stocks that are just chewing everybody up. I mean, yeah, hey, guess what? AMC probably going to make new highs. All right, it's sitting up there right now. If you're a day trader and you get stops above where the all-time highs are, which is not close to where, or is very close to where we are right now, you could scalp that for sure. But be forewarned, all right? That does come with a cost, as a lot of traders have seen that with AMC. We'll look at AMC. We'll look at GME. We'll look at Doge. We'll look at these things, and we'll look for potential opportunities, all right? I am an investor. I am a trader. As an investor, I go long things I plan on being in for a long time. As a trader, I look for rules-based opportunities. That means that we've back-tested them, we've analyzed them, we've looked at them backwards and forwards, and it doesn't guarantee it's going to happen in the future, but that's the way I trade, right? And for those of you that are pattern traders, then you know what I'm talking about. If you're new to pattern trading, then sit tight. I'm going to show you some patterns today. We're going to look at a various group of patterns. The other thing I want to mention to you guys is that, thank you again for tuning in. If you want to help me out and help our channel, a couple things you could do. Number one, like the program. It's right down there below the screen. Hit that thumbs up button. It does help support the channel. And also, engage with me. I can tell you right now, I will try to get to as many comments as I can, but I can't get to them all. There's just too many of them that pop up on the screen. All right. Hey, that being said, let's go ahead and get rolling here. I got to throw this on the screen for just a moment because, among other things, we all know in this room that stock and options trading and crypto trading has large potential rewards, but also large potential risk. We know that. All right. The other thing I want to mention is I'm not your investment advisor. I'm not your money manager. I'm here to educate you on how it is that I trade the markets and how I spot opportunities. That being said, you can read this in its entirety. All you got to do is just pause this stream, and then you can get right back to where we are. And I'm going to get into where we are right now. So, big news coming in this morning. All right. Obviously, the market's got to bounce. We saw that. The bounce off of the last, the drop started Wednesday afternoon, spilled into Thursday, spilled into Friday. Crypto dropped into Saturday. We had the pop on Sunday. Things look good. And then early this morning, we dropped again. We're really kind of bouncing at a very critical level. I'll show you what I'm talking about there. Gun stocks happen to shoot up. There's been a lot of issues around gun stocks. Smith & Wesson had a big move today. I think this is a move that could be faded. Once you start hearing about things, once the entire crowd, the mainstream media starts to pick up on this stuff, typically that's when the move has been made, at least for the short term. We're going to take a look at Smith & Wesson, and I'm going to show you what I'm talking about here. Amazon's Prime Day started today too, and I think that's going to be a plus for Amazon as we run into, so it's weird, Prime Day is actually today and tomorrow. I don't know why they don't just call it Prime Days, all right? But you're going to start to hear about how great Prime Day was. I'm planning on picking up a few things, all right? And so I'm going to be out in one of the national forests on the west side of the country next week. I'm planning on picking up a couple things before that happens. And I'm going to do it today and tomorrow. And so I'm going to take advantage of some of the Prime Day specials going on. What we need to think about as traders is how is it going to affect the stock? Now, typically what happens is we get this buy the rumor, sell the news effect, which means the rumor is that Prime Day is going to be great, and the news is probably going to be so too. But once the news comes out about how great Prime Day was, which will be tomorrow afternoon, maybe Wednesday morning, then we could see a bit of a pullback in Amazon as traders who were rushing in today. There was a drop in Amazon, but it came right back. Traders are rushing in to buy the stock today and tomorrow, and I believe perhaps tomorrow afternoon might be the peak. Again, all of this will unfold over time, but these are the patterns that we've seen in the past, and these are the patterns that I like to trade, right? So if you like the short-term stuff, that's the stuff that's out there, all right? So, that's what I see going on with the news right now. So let's go ahead and let's get involved in the markets, and let's see what's happening with the stock market itself. So I'm going to change gears here real quick, and I'm going to bring up my tools, tomsoptiontools.com. All right. And so when you look at something like tomsoptiontools.com, if you've never used this before, guys, we have a link at the bottom in the description for a 2-week free trial. Check it out. That's all I'm going to say about that. We are going to be using this in and out because this is what I use. This is stuff that's just not simply available to the public. Some of it is, but you got to worm your way around the web to find this kind of stuff. Not here. All right, here I can grab it, and I can grab it quick. And I can also do a lot of back testing on here as well. First thing I'm going to do is just go straight to the charts. So let's bring up the screen. Let me move my head to a smaller position. And let's go ahead and take a look at some stock charts. And so I'm going to start over here with SPY. Let's bring that chart up to about as big as I can get it, where I can still control the stuff down there at the bottom. But you can see SPY on the screen here. And you can see that that it is still moving in that upward direction. And more importantly, this is a 120-day chart. I brought up the 120-day chart because I want to show you what's been happening since the beginning of the year. Probably one other thing I need to do, and I'm going to turn it on right now, and I failed to activate this before we came in, is the big red pointer that I need to bring on the screen. All right. Big red pointer's on. So as you can see, I'm looking at the lower left-hand corner right down here by my shoulder where SPY was trading and hit a low of 365. Every low since then has been higher. All right. Even the mess that occurred in mid-May, we did not make a new low. Now we did have, again, if you see what's happening in the upper right-hand corner of the screen, again, Wednesday, Thursday, Friday, today. Today's the big turnaround day. that brought us up and closed the gap. Now, this should, and I'm not guaranteeing it, this should lead to new highs in the coming weeks. In the next couple of weeks, we have, again, the news is out of the way. The Fed's not going to bother us for a little while, all right? Earnings. We're not going to see any earnings of any magnitude coming out for a couple of weeks as well. So where are we heading? We are heading into Independence Day, right? 4th of July. Typically, 4th of July is a very bullish holiday before and slightly after the 4th of July. So we've got a lot of things that are looking to propel this market higher. The biggest is that no news is good news. No news out of DC, no news out of the Fed, and no news out of New York. So we've got a lot of no news happening. News is going to have to be found. There will be news announcements with individual companies, all right? I'm talking about, that's the alpha of the news. All right, when you take a look at the overall markets, the Dow, the S&P, the NASDAQ, these all should progressively move higher over the next few weeks, right? So that's the area I'm leaning into. I'm leaning into the long side. Last night we saw the markets down. We saw them, when I went to sleep last night, I believe the S&P was down about 25 points. Woke up this morning, it was up 15. Where are we at right now? We're up considerably more. So there's been this bump and run off of this morning when the buyers came in. The buyers actually didn't come in Asia. The buyers came in Europe. That's where the buying all began for the S&P 500. All right. So where do we see the S&P going? Like I said, I see a couple weeks of moving higher. Let's cut through the other charts that are what I like to call the confirmation charts. All right. You don't have to be Catholic for confirmation. Right here in Tom's Trading Room, we're looking at financial confirmation, right? Not religious confirmation. The financial confirmation that I see going on right now in the stock market, look to bonds. Last week, the bond market, let's blow it up. Let's get a really good look at what's happening here. The bond market had been moving higher a couple weeks prior. We had a little bit of a pullback. Here you go. Wednesday, Thursday. So see what happened on Wednesday? So the Fed was talking about raising rates, and the bond market didn't get a clue. The bond market said, it's fine. Thursday, the bond market said, no, and ran up. Friday, bonds ran up. Today, we're finally getting a little bit of a blowback from those highs. What I see happening is if you take the distance between the lows you see here and the highs you see here, see these dotted lines? These are stock chart peaks. Peak resistance, peak support. All right, so we've got a resistance level, which is now becoming support. This is on TLT. So if we scroll over here, you'll see that the support points are at 143 and 141. All right, this blue line is where I believe we're coming back to in the bond market. Because again, remember, in the long term, if rates are going to go higher, TLT is going to go lower. Right. And so, yes, we had a lot of bond buying that came in because the stock market was dropping last week. Now that bond buying is coming off. And even though the stock market, whether it goes up or sideways, the bond market should pull back and interest rates should tick up a little. So we see that 141 level on TLT is where we're likely to go. When? How about between now and maybe the week after July 4th? Because that's what we see happening on patterns. That's TLT. Let's move forward. Let's take a look at what the rest of the market says. UUP, cash market got a big bump. Again, Wednesday, Thursday, Friday, after the Fed made their announcement that they were going to be talking about interest rates. I'm not saying that wrong for those that jumped in. Talking is about, hey, we need to talk about something, but let's talk about it later. You get it, guys? When you're having a meeting, or or maybe your spouse says, hey, you know what? We need to talk about something. And usually that's talking about me, about something I'm doing wrong. All right. When my spouse says, hey, we need to talk about something, but we're not going to talk about it now. We'll talk about it later. That's talking about something. That's what the Fed did. So if you take a look here, Wednesday, we had that big jump up. Thursday, we had a gap up. Friday, we had a gap up. Today, we had a gap down in the U.S. dollar. So even the U.S. dollar, which is used to moving lower and I think is even going to continue to move lower because the Fed still has more dollars to print. I still see that happening. That's going to cause this US dollar to come back. And really, if you take a look at some of these gaps, I think we fall back down to around the 24.50 to 24.60 level before you know it. Commodities. Well, the first commodity we need to talk about is USO. We're going to talk about three, USO, we're going to talk about, which is oil, gold, which we'll look at GLD, and Bitcoin. We got to look at all three of those. So I'm going to take some breaks in between here to see what you guys are thinking about and what your, it's on your wish list to look at. So if you haven't done so yet, go ahead and chime in. Feel free to chat with me. Feel free to text me. You've got that texting ability. Guys, you get that chat ability. Put it in the comments section, and we'll be going through comments here in just a few minutes. Probably about 2 minutes, I'll go through those comments and start to look at them. USO, making new highs as we speak. Again, here's another one, I believe, that's going to be moving higher into the 4th of July weekend. Now, interesting thing about oil. Oil tends to move higher between mid-February and mid-July. Guess what? We're only a couple weeks away from mid-July. I see 50. Now, this says 52 over here. That's not the price of USO. The price of the assets on the left-hand side. So 50 is a round number that I believe we are going to gravitate to between now and in the next couple weeks. These red lines over here, well, this is telling me what the options are trading at. And the options are bumping off. Notice they were at their lows when USO was trading around 48. But as USO's gotten up, or 47, USO got to 48, got to 49, back to 48, back to 49. Look what's going on with the oil markets. The options on the oil markets have actually increased. So they're increasing as the price of USO is increasing. Not typically something I see. But as oil starts to make these highs and gets up into that area where it's going to cause gas prices to even move higher, which to me is a tax on everybody. Anyone who drives, you're being taxed right now, right? And so concern is that we're starting to see volatility creep back into the oil markets, and it's being shown, it's being expressed in option prices. Again, 5.0 is what I'm looking for USO, all right? GLD. Well, GLD kind of topped out a few weeks ago at just above 178. Then last week, remember Wednesday, dropped down in GLD. Thursday, big gap down when everybody said, oh, we're talking about raising rates. Friday, we get another low. Today, we get a bump up. Again, everything is starting to correct itself based on last week's aberrations. So I went long GLD, all right? I sold some puts on GLD last week. So turned out to be a good decision, because GLD's kind of moved up. So my gold positions, my GLD positions got a little bit better off of Friday's mess. My options positions, well, they expired out of the money. So I ended up keeping that premium. But that's GLD. All right, let's see what you have to say. So I'm going to move over and take a look at what's happening in the chat box. And we got a lot to chat about here. Got USO when you first started talking about it. Yeah, my USO position's actually up a little bit here. And so, again, we see that going on. What a good day to find stocks to trade. I agree, Cindy. Thank you very much for the comment. Crypto is, we're going to get into crypto in just a little bit, Kyle. And I'll pop up and look at that again, too. Portfolio prediction on crypto. You might not be happy with what I have to say when it comes to Bitcoin and Ethereum. I think it's going to be a little short-term pain, but I think it's going to be a long-term success, as it was in 2014, as it was in 2017, as it was earlier this year. We'll get into it. We'll take a look at it as well. Jay, I appreciate you hanging out with me, buddy, and helping us out on that TTR support there. Thank you very much. What would I do without Jay? Guys, thank you all. I see a lot of you kind of coming in saying, let's look at a Bitcoin. Let's look at Ethereum. Absolutely will. Ethereum, please. Absolutely. Ethereum. Yes, we're going to get into Ethereum. How about PayPal? You know what? Let's start with PayPal. Taryn's asking about PayPal. Let's take a look and see what's going on with PayPal. So I'm going to bring up the chart again. Let's take a look and see what's going on. Again, let's move over to the symbol, and I'm going to look at PYPL. We haven't looked at that one, and let's take a look and see what's happening with it. Now, I have a number of different ways I can look at these stocks. And one of the ways that we've been doing it with our proprietary software is looking at what we call stock chart peaks and stock chart support resistance peaks. We're in a resistance peak with PayPal right now. See the dotted lines? So PayPal's trading right around the 282 level. And as you can see, we're hitting that stock chart peak high. All right. Now, that stock chart peak high takes a look at the entire chart and gets a look at opens and closes throughout the chart, and it runs those. And interestingly enough, we have a stock chart peak resistance, which is equal to Friday's high in PayPal. PayPal had to run up while the rest of the market was running down. It is only to be expected that if this stock was running up last week while the stock market was dropping, that we're going to get a little bit of a pullback. But we need to get above and close above Friday's high. And then we can look to this next stock chart peak, which is considerably higher. That takes us all the way over to what we saw earlier in the year when PayPal was at 305. So that's what we see for PayPal. Now, the other thing I'm going to mention, those of you that are option traders, PayPal has earnings in 37 days. The options are actually quite cheap. So if you're looking at PayPal going into earnings, to me, and again, no guarantees, but I'm looking at this, I want to be an option buyer. I want to be a buyer of time, not a seller of time. We can be a seller of time as we get close to those earnings and that implied volatility, which went up the month prior to earnings on both occasions. You see that red line going up into the E and then going up again into the E, and it looks like we might be slicing our way higher to higher option premiums, higher calls, and higher puts as we head into those earnings as well. So, Taryn, thank you very much for that. We'll get into Ethereum in a moment, guys. Let's see. A is asking about C. A is asking about C. Reminds me of that. If A is talking to B, you need to see your way out of it. Another family thing that goes on in the household when my wife and I are talking to each other, and one of the kids poked their head around the room and say, "What?" We say, "Hey, look, when A's talking to B, you need to see your way out of the conversation." So A is talking about C in this case, and C is Citigroup. So let's take a look at Citigroup. And C is what we're looking at here. So what happened last week? What happened in the last couple of weeks with Citigroup is Citigroup has dropped. The reason Citigroup is dropping is because you're getting a pullback, you're getting a rotation back out of bank stocks because they did so well in the months of April and May. And, and as we've gone into June, you've seen them kind of move over because everybody's been talking about them, right? I had a short-term signal on a bank stock, didn't work out, right? No matter what my patterns were telling me, didn't work out. So I stepped aside. And so small risk, hey, it happens. That's definitely one guarantee you're going to have as a trader is that you will have losses. It's how you manage those losses. And you can manage those losses a number of different ways. Putting a spread on that has very, very low risk is a great way of managing losses. Maybe looking at a chart that's falling and going through a target price. And that's what I see kind of here with Citigroup. So Citigroup, as you can see, we hit on Friday an area of support. These are stock chart peak resistance levels here in the black lines you see. The blue lines are support levels. We hit a support level and closed on a support level Friday. We're off that. That's a very good level right there. There could be a line in the sand that says, if we close below that number, maybe I need to step aside. If I'm a trader, if you are an investor in Citigroup, whole different ballgame. All right, you're looking at the very, very long term. You're looking at interest rates going up is actually a good thing for banks, brokerages, and insurance companies. So again, it depends on what you're doing with the stock. Again, investing, trading, two different things. All right. And last week I talked about, if you remember last week, I talked about a vertical call spread. I was talking about different ways to make money in USO. And I went ahead and put a vertical call spread on for all of you. I did it right here in the room. I didn't do much, but I did it to show you how it's done. And I'm still in it. My plan with trades that I take is that I have a target price on USO. We hit 50, I'm getting out of it, all right? But I didn't put that on for a week. I have that on for a few weeks as we head into the next month. And my plan is to move through that. I've got a target. I've got a stop, which is the actual spread itself, because it was so cheap. The stock was so cheap. And, here's a rule that I use that I'm going to put out there for everyone that are option traders. All right. If you put a position on that you have to think about more than once a day, then you put on too large of a position. Okay. Leave that to the folks that are out there with the diamond hands. All right. I know I'm going to get some flack on this. I know I am. I am. All right. So, diamond hands out there are folks that are trying to, they're putting money on lottery tickets. And yes, AMC, I'm going to put it on the screen right now. AMC could go to the moon. All right. But I don't want to risk my entire amount I don't want to risk my whole wad on one stock, because, you could be a millionaire. You could be a multimillionaire throwing all your money into something like that. Or you could be broke. That's a 50-50. That's a coin flip. Anyone that's willing to throw down that much money on a coin flip, I have a better alternative for you. Go to Las Vegas. The drinks are free. You might even get comped a room. Okay. You don't get comped any rooms here on Wall Street. Therefore, to me, I want to spread my risk out. I want to spread my risk out with high probability, low risk. That's what we're looking at doing. Let's look at AMC right now. So AMC, big on the block right now. And, I mentioned that this thing is close to the all-time highs. Well, look what's happened since this morning. So AMC, which was trading right up here. Remember, here's my open, 61.34. Here's where we are right now, 54.94, right? I played AMC last week. I was bullish on AMC. You know what I was bullish on? Bullish on it not going down here below 40. And I was right. And I'm bullish on it again this week, but bullish on it not going down here. So I can play option trades down here outside of the blast zone. If the blast zone is so big that I'm going to be affected by it, I'm going to lose a lot less than someone that's buying the stock up here or someone that's buying calls at the $60 level. Crazy buying call options. Even down here, we're down above 55. Take a look at this real quick. I'm going to show you guys something. So take a look at the option chains for AMC. Here's the Friday, June 25th options, 4 days to expiration. Ready to see them? Let's take a look at what they're going for. Right, here are the calls on the left, the 55 calls, $6.68. What that means is between now and Friday's close, this stock has got to be $6.68 above the strike price of 55 for you to even break even, right? That's crazy. The way this stock's moving around, yeah, that's why it's generating these high option premiums. But I mean, you're talking about calls that are more than 10%. You buy the stock. If you buy the stock at 55, you hold the stock at 55. You're purchasing 100% of the stock. But by purchasing an at-the-money call option, actually an out-of-the-money call option, you're going to spend 10% of the price of that stock. And that stock needs to be 10% higher by this time, by the close of this week, close of Friday, for you to even break even. You want to double on this move? We need a 20% gain in AMC in 4 days. Can it happen? Yes. But the laws of statistics say that it has just an equal chance of going down 20% as it does going up. All right. And actually, if you take a look at the calls and the puts, this thing has a 20% stock range. Statistically, means it could be 20% up, but it could be 20% down. And it could be anything in the middle. And that is where folks are getting eaten up. They're getting their call option values are getting eaten up. So just be forewarned. There you go, guys. So how do you sell time in AMC? And that's what Lauren's asking right now. So how you sell time in AMC? Well, there's two ways to do it, Lauren. There's a few ways you could do it. You could sell puts. All right. If you're bullish on AMC, instead of purchasing the stock, what about selling puts? What about selling those 54 puts for $6.10? That gives you downside protection of 10%. Let's say you need more than 10% protection. What about the 50s? The 50s are selling for $4. That means that you have $4 below 50 before you start getting hurt at the end of the week. That means your break even is 46. Now we're starting to get somewhere. But here's the problem. Do you want to risk $4? All right. Risk. Do you want to make $4 when you could risk $56? Now, I don't see AMC going down to zero by Friday. Don't see it happening. The company's moving around. It's just trying to do things. But could it go down to 40? Could it go to 30? Yeah, it could. So your $4, you got to look at where you see the projected risk at. The projected risk on AMC I see is at 40 by the end of the week. Could go to 40. So if we sell the 50 puts for 4, they could be worth 10 at the end of the week because the stock can drop to 40, and that means you're on the hook to buy the stock at 50, a $40 stock at 50. So you're down 10 points. You took in 4 for that, so you could have 6 points in terms of risk. Another way you could do it is with credit spreads, where you could sell a higher strike put, buy a lower strike put, and you could take a credit in. That way you're not at risk. The only risk you have is in between the buy and sell strike. That's a way to do it too. Now, for those of you that are bearish, take a look at the call spreads, okay? We could put a position together that has call spreads as well. Let me show you an idea that could be an advanced idea with AMC. Let's go over here, and I'm actually going to spread this out. We're going to look at 20% above and below the stock price. I don't know what to expect on this because I haven't done this yet. Part of this live experience is I want to experience it live with all of you. But let's say that we look at, for instance, let's say that, stock's trading at 55 right now. So 20% below 55 puts us at the 44 position. What if, for instance, we bought, stay with me here, bought the 45 puts and we sold the 50 puts? Now, where do you make money on this trade? Anything above 50, you're maxing out. Anything below 45, and you've had a total risk, but nothing below 45. It could go to 0, and your risk is at 45. What's it going to cost to do that? Let's take a look and see. If I bring the risk graph up, it's going to show me that this trade, I can do this trade. I'm going to bring in around $194, but I'm going to be risking 306. How is that? How am I risking $300 to only make a little less than 200? Because it's a 5-point trade. I'm going to bring in almost $2 in credit, but I'm on the hook for 3. How can I make this trade any better? If we apply the delta neutral approach to it. Now, let's go back and let's take a look at the options once again. Remember, I am short. I'm short the 50s. I'm long the 45s. This is a bullish credit spread. Let's add a bearish element into it and try to make ourselves a range. So looking at the call options, all right? What if we were to sell the 60s, okay? Sell the 60s and buy the 65s. What are we doing here? Oh, let's add this in. What I'm doing, and what you're going to see here, is something that's called an iron condor. An iron condor is we're bullish and we're bearish at the same time, okay? I want you to think about the term bullish because that's what we're looking at in the case of AMC. If you want to put a bullish trade on, that means we're bearish above the price of, again, let's look at the trade real quick. I'm zooming in on the trade. We don't think the stock's going above 60, but yet we don't think it's going below 50 by the end of the week. Okay? What are we doing? We're selling premium up here and we're selling premium down here. We're creating a fence. We're creating a fence for the trade. As long as it stays inside the yard, that's what we like to call it, then we make money. And get this, we actually make more money than we risk. This is an absolutely beautiful trade. You're not going to hear about this on the apes aren't going to talk about this. All right. The apes being the folks on the other channels that are watching real time and they're saying to the moon, space apes. Not going to hear that. You're not going to hear about that on here, all right? These are calculated trades. A calculated trade would look like this. For every one of these iron condors, this is a four-legged position, folks. This four-legged position, you know, some of you are going to say, yeah, but if I get into this, you know, it's got slippage. A limit order helps you avoid some of the slippage. Now, you might not get filled on a limit order, but you might. And with all the volume going into AMC right now, the chances of you getting filled at a decent price are better than not. But this particular trade, you're looking at bringing in, I mean, $317. Even if you brought in 300 and you're risking 200, what you've done is you've created a trade now where as long as AMC stays between 50 and 60, or excuse me, is between 50 and 60 by Friday's expiration, you keep the entire, you keep the whole thing. You keep the credit you received. All right. So you have a trade where you have a bullish component and a bearish component all in one. This is actually, in my mind, the right way to trade these type of stocks. Now, if you think this is too close, if you think 50 and 60 is too close, you go out and you widen the spreads between what you're buying and selling, right? Go up higher, go down lower, put your spreads farther apart if you want to. You're going to take in less, you're going to risk a little bit more, but your probabilities go higher, okay? It's called an iron condor. You're going to need something more than a level 1 or level 2 clearance to do this, right? But it is available. Actually, level 2 clearance, I think, can do this. These are vertical spreads. All you're doing is adding a vertical spread above and adding a vertical spread below, right? Credit spreads. This is an example, guys. Again, I'm not telling you to do this. I'm showing you how you can do this. That's the way I'd trade AMC. All right. Okay. So, oh, and by the way, here's what the risk graph looks like. So this is important. This is the things that we look at here on, you know, within our organization. We look at risk. What if I'm wrong? Those 4 letters, those 4 words are what we talk to ourselves about, you know, when we put these trades together. What if I'm wrong? Well, if I'm wrong and we go above, you know, so look at your break evens. Your break evens on this trade at expiration. Here you go. These are the break evens. 46.83 to the downside and 63.17. Remember that $3.17? You take that, you put that above 60 and you put that below 50. And that widens out your break even a little bit more. So, I mean, we're talking about a pretty wide spread, but we're also talking about a stock that moves around quite a bit day to day. 4 days to expiration. This is what your risk graph looks like. Again, as long as we stay right in this area, 4 days from now, this is where we could be, above the $300 per spread area, $300 in profit. All right. Hey, what do you guys think about these? Give me some comments on the way that I look at trading AMC. I made the full boat on AMC last week. I believe I did on the week before too. So I'm showing you ideas of how I do it. I don't buy the stock. I don't sell the stock short. All right. And so again, I use options and I use higher probability. And you know what else this comes with? This comes with a lower rate of stress than buying that stock, selling that stock, and getting that high. That high, which you know, those 2 partners we don't want to be in business with, fear and greed. You want to avoid that. You want this to be as boring as possible. Boring makes money. Boring allows you to do those things you need to do, and not force you to do things you don't want to do. Okay? So that's what we're doing, guys. All right, so hey, let's talk about cryptocurrency now. I know a lot of you have been waiting on that, so let's get into cryptocurrency. Cryptocurrency is kind of kryptonite, if you will, with what's going on in the markets right now. So you take a look at cryptocurrency, you can see I got a chart of Bitcoin up here. It doesn't look pretty. It doesn't look pretty, guys. You know what? In fact, let's just bring that up and let's just take a look at latest. And latest shows us that we've seen crypto now, when I draw a Fibonacci chart on crypto and the end of it is today, if the end of it's on the high note and I'm long, that's fantastic because it's really resetting itself. It's resetting. It's every day it's setting a new area for the crypto. Well, unfortunately, that happens to the downside too. And we're sitting on where right now. I said last week, I said the last couple of weeks, 33,000, and it's like the low 33,000s were the areas where I was concerned about the markets setting new lows. Well, we've breached that. We're at 32,929 right now as far as the close that you see on this screen. What does that mean? That means we are likely to head lower. I hate to say that. I don't want to say that. I know there's people in the room right now that are going to leave when I say that. I remember when I used to do live events. Let's go big picture here for a moment. Here's a story for you. When I did live events, I went to what was it? Money Show. It was the Money Show. I was speaking at the Money Show, and so they do these little breakout rooms. So I'm in a breakout room and I'm talking about risk and reward, just like I was talking about with the Ion Condor. A couple came in the back room. They came in while I was speaking. I could see them. My peripherals were on. And I saw them sit down. And immediately they're raising their hands. This was not I was not doing a Q&A seminar. I was talking about risk and reward and high probability. Guy wouldn't stop raising his hand. I said, all right, I'll take your question. What do you think about, and I think it was NVIDIA, it was a stock. And I said, this really wasn't the point of the discussion. We're talking about how to create reward to risk ratio trades with non-trending stocks. But hey, you know what? I'll honor your request. We'll take a look at it. We'll see what it says here in the with our tools. So I bring out our tools, and I don't see a reason to go long, and I don't see a reason to go short. And I said, I'm sorry, but there's nothing right here that indicates that this is something that I'd want to buy or sell. He grabbed his wife and they left. I mean, literally, as I said that, he stood up, he grabbed his wife's hand, and they walked out the door. You know where they were going? I know where they were going. They were going to the next room. They were going into breakout sessions, trying to find somebody that agreed with them, and that's where they were going to stay. And the reason I bring that up is because there's going to be things in this room that you don't agree with me on, and that's fine. Guys, that's what makes a market. We can't all be buyers. We can't all be sellers. The markets are disagreement, and disagreement is what causes prices to change hands, right? So, for those of you that are looking at Bitcoin right now and you're like, no, I don't like what Tom's saying. I'm not saying it as an opinion. I'm saying it based on what we see, patterns that we see in the marketplace. And, when you go back and you look at BTC, let's go back 200 days on the chart. And let's see if we can get a better understanding of if it does drop, where's the next price? Here's the problem. This is where it gets a little bit worse, ladies and gentlemen. And that is that if you take a look at the right-hand side of this longer-term chart, you're going to see 63,558. You're going to see the 38% pullback, 46,168. You're going to see the 40,000 mark, which is the 50% pullback. You're going to see 61.8%, which was 35.4. Where are we at now? We're down in the 32.9 area. We're down here. Critical level we've got here. This is 30,000. This is 31,000. All right. This was 32,000 earlier today. So we have some things to look at here. As traders, I think when we close below 32, if we got to close below 31 today before I get a little nervous. Going forward, we got to close below 32. Then I get a little nervous if I'm a long trader. But as an investor, I'm willing to wait out the time on this. Not in weeks, not in months, but possibly in years. Right? The other thing I want to mention is this. Anybody want to take a stab out there and tell me how many cryptocurrencies are available to trade in and out of Coinbase, in and out of Binance, everywhere? How many cryptocurrencies are, when you look at alt currencies, how many are out there that we could trade? There are thousands. Okay, there are thousands. And I mention this because the majority of them, I'm going to tell you right now, they're not worth dirt. There are a select few that we analyze, that we look at, that I think are not only going to make it, but going to thrive in this kind of environment. All right. Take a look at, there you go, 10,000. Charles said 4,000, 4,800, over 3K. You guys are all right. You're all absolutely correct on this. And really, a lot of it depends on where you're looking at. Right. But I want to, Tim brought this up. This is a very interesting point. YFI is not following BTC. All right. So let's just look at YFI real quick. I want to go back to the 100. In fact, you know what? Let's go back to the 50-day chart. Let's look at a 50-day chart. Is 50 not enough? No, 50 is almost enough. 75. You know why I'm trying to get that? I'm trying to get that all-time high in there. There it is. 75-day chart of BTC. Now, let's roll down and let's look at YFI. Now, again, 75-day chart in YFI. So I'm showing you this because 75 days ago, YFI was at 45,000. 50 days ago, YFI was at, this thing went to 95,000, guys. And the closing high was 82.9, right? YFI, well, it dropped too. It's down to 30,000, okay? But it's not lower on a percentage from April to now that Bitcoin is. What does that mean? Okay, I'm long YFI, right? I'm long around the 35,000 level. I'm down 5,000 a token on this one. But I like this coin. I like this coin even more than just a trade. I like it as an investment. I'm going to add to this position, right? Why do I like it? I like it because they prove to the network. All right. They are proving to blockchain. They're a great company. They have a great service behind the product. The best part is they don't have millions of coins out there. 64,000. It's a small amount. This one is going to be more volatile, though, because there are so few coins that when it does get picked up, it's going to move fast. All right. So I'm just putting everyone on notice about YFI. Although I like it, it's going to be more volatile. All right. Simply because of the lack of supply, lack of circulating supply out there. All right. So that's YFI. And you know what? My apologies. You're seeing it on the small screen. Put it on the big screen. Really blow it up here. Give everybody a good look at what's going on with YFI. You can see there's that high. And guess what? We're hitting lows right now at around 30,000. The low was below 25 back on May 23rd. So again, we haven't hit that low, but that could happen. And you know what? I'm picking some up if we hit that low. I'm picking some up at the 25K level. So, all right. So that is cryptocurrency. And cryptocurrency in a nutshell, I think as investors, we got to look at cryptocurrency as an area where we might have to suffer through some pain before we see that longer term result. Again, cryptocurrency, absolutely the most volatile thing that I'm invested in and that I trade in. But at the same time, I'm looking at this as long-term storage of wealth. People that have a lot more money than me have a lot more money into this, right? Michael Saylor, for instance, a lot more money than me. A lot of 7-8 figure account holders that are out there that have a lot of money tied up in Bitcoin and Ethereum that are also, looking at this as a long-term storage of wealth. I said it before, I say it again. It probably is the easiest long-term storage of wealth than anything. All right. Real estate, you can't take that with you. I mean, you can on paper, but the problem is that it's still wherever you left it. Real estate is. Gold. How much gold can you take out of the country with you? I think maybe 10 1-ounce coins, depending on what country you're going to, and that might be a high number. But cryptocurrency, you can stick it on a thumbnail drive. You can take it anywhere. You can put it anywhere. It can be stored offline. That's where I think the real value of certain crypto is for the long term. Okay. You know what? I didn't talk about it, but I'm going to bring it up real quick. Let's take a look at Ethereum. And Ethereum made some new lows, some new recent lows. I got into more Ethereum. All right. If truth be told, I had a buy limit at 2,000. Well, we went below that. So I got long more Ethereum. And I want to show you where Ethereum is right now. As you can see, it's down to 1920. Right. So it blew through the 2,000 area a little bit earlier today. And I'm down a bit on that one, $80 on that latest buy. But again, Ethereum is a long-term purchase for me. I'm not looking to flip this thing. Right? In fact, I have sold 0 Ethereum. I have sold 0 Bitcoin. I have sold 0 YFI. All right, these are some of the longer-term purchases I have. I'll sell them one day, but I don't look to sell them anytime in the future. I buy them and I put them away. That's what I'm doing with these as long-termers. Okay. You know what? I didn't even have the chart up there, guys. Someone yell at me if I'm doing something wrong on the live stream. There's the chart, real quick. I'm looking at the chart, and I didn't even see that you weren't seeing it. But there it is, that long-term low that you see happening. Mr. Esterhaus, he's saying, put the screen on. You got the big head screen on. I have the big head screen on, but I don't have a big head, or at least I don't think I do. But there you go, guys. So that's Ethereum. Let's do this. I want to go through the morning report with everybody and go through it and really look at what I think is the most important part of the morning report. If you're new to the channel, guys, a couple things I want to mention real quick. We have an app. All right, an app that's available for download, and it's on the iPhone. It's at the Apple Store, the Google Play Store. It's called TG Suite. You want to do a search on it, you want to punch in TG space suite. You find it, download it. If you're a tools user of ours, just use your username and password. If you're not, go down to the bottom where the login is, and you can find what's called the non-subscriber login, right? Username and passwords, what you're going to need, that you're going to create. And guess what? You get access to that bottom button. It's called Morning Report. All those buttons above it, those are premium buttons. But the bottom report, click on that morning report, and you'll have access to these 6 areas right over here. High volume, high open interest, unusual calls, unusual puts, cheap and expensive IV. I've got a video coming out as early as tomorrow on how I trade high volume and high open interest. All right, I did an unusual call and put volume video last week for those of you that want to take a look at that. It's on the channel. Today, I'm going to jump back in and we're going to see what's cheap and what's expensive. So let's go ahead and do that now. So to do that, I have a couple of different ways I can do this. You can do it on the phone. If you have a phone, you can do it on the phone. Yeah, I'm getting lots of little things going on here. But if you have our tools, you can also do it on the desktop version, but you need our tools to do that. To do that, let's move over and let me show you how that's done. So I've got it all set up, but what you're going to do is you're going to simply go to options when you log in and go to rankers, because these are option rankers. These are not stock rankers. High volume, high open interest, all right? Unusual call, unusual put, expensive and cheap. They all revolve around stock options. So you're going to find them in our option rankers. So you're going to go to morning report, and this is what's going to pop up. The data is always going to be from the close of the previous day. So when you look at this, don't message me and say, hey, Tom, your data's a day late. No, we run the data as of the close of each day. So the best time to check this out is actually in the morning, because it's already a couple of hours old by the time we get to where we are now. Take a look at our expensive IV. So I've got TWNK. All right. That's Twinkies. That's Hostess. What's going on with Hostess? I got to figure this out. This is important because, I had a bunch of options on Twinkie that did very well for me. If we're expensive on Twinkie, is it Twinkie? Yeah, Hostess brands. What's going on with Hostess brands? Why are they so expensive right now? So we don't have earnings for 44 days. It's gotten expensive. Stocks trade around 16. All right. You know what? it's time to trade. It's time to look at this. So I'm going to go ahead and I'm going to bring up another option chart with everyone on the screen. Let's just take a look at stock and option table. I'm going to reset this. TWNK. Curious. What is going on with Twinkies? Well, Twinkies, the first of all, we have 25 days to expiration. So there's no weekly options on Twinkies. So I can't try to make a fast buck on these. It's going to be the slow buck. All right. So what are the Friday options trading at that are 20% above and below? Let's go ahead and let's just hit the update button one more time. Well, the 15 calls are going to cost me $1.55. Here's what I'm looking at here. If you want to look at what I look at as an option trader, I look at that $1.55 and I say, all right, most of that's going to be time value because the stock's trading at $16.20. So there is 35 cents of time in this trade. Most of this is wrapped around real money. So instead of buying the stock for $16.20, I could buy these 15 calls for $1.55, which is a lot less. And the majority of that is real. $1.20 of that $1.55 is real money. That means it's going to move a lot like the stock. That's much better than buying AMC calls where none of it was real value. All right, the other thing I'm going to do is I'm going to come over here. I'm going to say, well, what are the 15 puts trading for? Can I milk the 15 puts at all? 43 cents. All right, those are $1.40, $1.20 out of the money, the 43 puts. So if I sold that put, I'm going to take in $43. I've also got to break even. It's somewhere down near the $14.60 area, $14.57, I believe, is my break even. That looks interesting too. But it all wraps back to what does the chart look like? All right, what does the stock chart look like? And the stock chart, again, if we bring up Twinkie, we can see the stock chart has been moving higher. Where's 14? I mean, here, where's the low in pretty much almost the entire year? The low is down here at 14.5, which is close to the break even of those 15 puts. See what I'm looking at? That's how I analyze risk and options. Twinkies, for some reason, they're expensive, but they got to be something. I can tell you right now, everybody else out there in the live stream universe and Twitter, they're not looking at Twinkies. They're looking at the second one, AMC, which is the expensive options. We talked about it already. All right. BB is on here as well. Blackberry. Let's take a look at Blackberry's stock. So Blackberry stock really did become a meme stock. This one went from 8 all the way up to 20. Crashed back down. It's down here around 13. We were talking about this last week. And everyone that was on here, we were looking at Blackberry and it just didn't give us a big reason to be buyers. I think we looked at some holding parts and maybe it might have held and maybe not, because last week the stock was trading at 14. This week it's $12.82. I like to sell these memes. I like to, sell around them. You guys know what I like to do with meme stocks. All right. URA is on here. Nucor is on here. CWB, ANAT, Nike, STLD. All right, so that's the expensive. What's cheap right now? NVAX is cheap. CVNA is cheap. I'm looking at a lot of stuff that I don't know off the bat what they are. But I know what American Airlines is. All right. I know what JD is. Tesla. Tesla's cheap. Let's look at Tesla. Why is Tesla cheap? Tesla's expensive. No, Tesla's not expensive. The stock might be expensive, but take a look at the stock. The stock is starting to go up. All right, it's off a little bit because the market rebounded. The stock went up last week because the market fell back last week. But look at the implied volatility, right? The IV on the options got expensive when Tesla dropped from 800 down to 550. But as it started to slow down its rate of descent, in fact, it even came down again. It came down and double tapped 550. But the difference is when it hit 550 the first time, options were trading at a level of between 85 and 90. When it tapped 550 the second time, options were trading between 55 and 60. They were cheaper on the second drop down, right? Now it's starting to consolidate a little bit. Options are cheap. I don't like being a call buyer or a put buyer on something that's a $600 stock. But we could spread these options closer to where the money is and get in at a much cheaper rate and have a chance of actually making something. And so that's why I look at the cheap IV. Cheap from where it's been, not cheap where it is today. Cheap from where it's been in the last year. That's what these two reports tell us. All right. Hey, straight up 1 o'clock, before we leave, I want to show you two more charts. I want to talk about Amazon for a moment, and I want to talk about Smith & Wesson. All right, so let's talk about those because it's important to get to them. Guys, before I get into these two stock charts, I want to say this. If you're joining me for the very first time, or if you're here again, you want to help the channel out, there's a very easy way you can do it. It involves taking your mouse, going down to that thumbs up button and clicking it and making that turn blue. If you highlight that, it helps support the channel. Also, I didn't say this at the beginning of the show. I'll say it right now. We do accept super chat donations. There's a way you can super chat to us and donate to the channel. It's not going in my pocket, all right? It's going to various charities. Our big charity for the month was LBX Sports. We've donated thousands to LBX Sports over the last 30 days. Every month or so, we take what we bring in profits on the YouTube channel. All right, not just the live stream, not just the super chats, everything we make on the video or on the channel. We end up, we did it last year, we're doing it again this year. All of that is going to charities, various charities. I told you St. Jude is what we're looking at this month as one of the charities, what we're going to be looking at for the end of June and into July. But I want to thank all of you for those super chat donations, okay? And I'm looking at these on the screen here as they come in. I want to thank those of you. Again, Gary, appreciate it. Thank you for that super chat donation. We love those because it just really does help push those numbers straight to charity. Okay, let's take a look at Amazon real quick. AMZN. So AMZN, and I've got it on the chart right now. And let me make sure I do have big chart on. So Amazon is coming back up and it's hitting some interesting numbers. This was the 3,200 level. This was a good month and a half ago, back at the beginning of May. Prior to that, we were coming up into earnings and Amazon was hitting 35, 35.50. Well, guess what? We're kind of there today. We had a drop this morning, had a push down below, I believe it was the 34.50 number, and then we've come right back. Amazon's Prime Day is today and tomorrow, if you didn't know. All right, Prime Day almost always involves the stock moving higher. Buy that rumor, sell the news. What's the rumor? The rumor is how many people are going to participate in Prime Day on Amazon's e-commerce site and buy something. The news is going to be when it's actually reported. So for the next day or two, I expect Amazon is going to slowly move higher. I think we could get some volatility afterwards. But the safe short-term trade is Amazon moving up over the next 24 hours. Then I think it starts getting a little bit more volatile after that. We will see. All right, so that's Amazon. Smith & Wesson. So gun sales have been back on the rise again. And, and it hasn't just been gun sales, but finally the news came out that Smith & Wesson has seen a huge uptick in gun purchases, not only through various gun shops, but at the shows. Apparently, even though seminars and trade shows have almost become non-existent, the gun shows have not. Gun shows are still attracting people. And so when you hear about some of the things, mainstream media, that they are the ones, if you want to say, oh, this is a travesty, so many people are buying guns. Don't blame the folks that are going out buying guns. Blame the fear that's being pushed on by mainstream media, because the more that we see what's happening in Portland, the more that we see that's happening in some of these blue cities. I bring Portland up because the riot police just walked off the job last week. You know what happened? I'll bet a lot of people in the Portland area, that area, are looking at trying to figure out how they can get a gun in their possession. But more importantly, people that are in red states, people that are in states where gun ownership is allowed, they're going out and they're buying guns. And if they're not first-time purchases, they're going out and buying more. Well, the news is out. That's exactly what ended up happening. We saw that we not only saw, if you look at my chart here on the screen, the earnings were up and we shot up. We shot up to new. I want to call it intraday highs or yearly highs on Friday. But then today's just been a huge move higher, folks. We've seen this happen time and time again. All right, you're getting a big move up. I want you to pay attention to something. I want you to pay attention to the volume that's going on. It's down here. You see that big volume spike that occurred? That happened on Friday, where the day after earnings, where this stock is used to having a million to 2 million shares a day trade hands, 21 million shares almost traded hands on Friday. That's a 10x in volume from 2 to 20, 10x. Big volume. All right. That was exhaustion, either coming into or going out of the stock. Either way, that's exhaustion. What did that spell for the stock? Well, it spelled a gap move that has almost doubled in value today. So I believe when you look at the short term, the target for Smith & Wesson short term has been reached. All right. There has to be some sort of mean reversion after these 2 days up. You take a look at these 2 days up and look at the mean price. The mean reversion is somewhere between 24 and 25, which is where I think the stock has to gravitate back to. And we will see. All right. Fred, great comment, by the way. I was at the gun show this weekend. Big sales. It's happening. I mean, you know, it's happening anywhere there's gun sales. You're seeing folks that are swarming into these places. You know, just more than anything, you know, I wonder how many, and think about this. This is more of an opinion than it's not a fact at all. But I wonder how many people are buying guns just to have in the house. They haven't even taken a class. They don't have an open carry. They don't have a concealed carry. They maybe haven't even gone to a gun range yet to fire off this weapon. They just bought it because they just felt like they had to have it in the house. All right. I wonder how many people have guns in their house that don't even have ammo. I wonder if they're using it for show. Whatever the reason, Smith & Wesson doesn't care. They only care about the fact that their numbers have gotten extremely high. I'm really curious. I'm really curious as to you know, what that is. I mean, you know, you see the big moves, and it is reflected in the price. And like Mike's even saying, it is reflected in the volume. And so, you know, that's it. I mean, I'm not gonna sit out here on my live stream channel and tell you guys to get a weapon or not get a weapon. That's not what we're here for. All right. What we're here for is to find patterns and spot patterns of recognition and try to trade on them. That's what we do. That's what we do here at the room. We do it every single week here at noon. I will say this, guys, before you go rushing out of here, let me mention this real quick. I'm not going to be live streaming next week. All right. I'm not live streaming next week. Next week is my birthday. I'm turning 56. I am going to be spending my day or couple of days, long weekend, what I'm going to be turning it into. Going to be spending that in the woods. All right. In one of the national parks that I've been wanting to go see for some time. I am going to disconnect. I'm going to disconnect from markets. I'm going to disconnect from technology. I'm going to disconnect from the computer. All right. And so, and plus I promised my wife I wasn't going to stare at a computer for a little while. So anyway, I say that to you because those of you that might be missing the live stream next week, don't worry. I'll have a video for you. All right. I'll have a video for you on one. I'll say this. It's going to be on the best way, my most reliable option strategy over the last 12 months. All right. How I use it and what stocks I am targeting. Okay. And these are not something that are day trades. They're not even weekly trades. They're that 30-day income type of trade. But I'm going to share with you what's been my most reliable strategy. So I'm going to leave that for you next week while I'm off in the wild blue yonder. All right. Looking at lions, tigers, and bears. So anyway, guys, I want to thank you all for being part of the show. Hey, if you haven't done so yet, please do me a favor. Give me a thumbs up below. If you're a new person to the channel, want to welcome you. If you want to get, we do about 3 videos a week here. If you want to get those on a timely basis, subscribe and make sure you ding that bell. All right, ding that bell. I find that a little less than 50% of the folks that are visiting our YouTube channel are actually subscribers. And I've been told that's actually a high number. But anyway, you know, we'd obviously like to make that higher. We'd like all of you out there that if you find this information relevant, if you find it, you know, informational, educational, maybe even a little entertaining, then please subscribe to the channel, ding the notification bell. You'll get the video when we launch it tomorrow, which it'll be a part 3 of a series on how we're looking at high volume and high open interest in our options trading. Thank you all so much. Have a great rest of your day, and I'll see you on the next video. Bye now.